Good afternoon. This is the Tech Report. The tech sector was the only index in the green at the midday, and now it's pulled the other indices up along with it. The group was led by positive performance from Facebook, which was up 2%, LinkedIn, which gained 4%, Zynga up over 6%, and even Twitter was climbing just a little higher. One stock that has seen its value soar over the last week is Gogo. The stock is up 65% in the past month alone. Jim Cramer has said that he liked the stock, and that combined with a big media push helped to drive the stock higher. The question is whether it can keep this rally going. Joining me now is Jill Malandrino of Option Profit. So Jill, not only is the stock hitting all-time highs, it's also seeing the implied volatility rise too. So what's the significance of that?
What's interesting with Gogo is that it's trading 6.7 times its average trading daily volume. That's a big number. When we look at 52-weekers in terms of stock price hitting a high, typically you'll see the 52-week implied volatility, which is expected movement on the stock price, go to a low. So what's interesting here is it's moving at an all-time high with the stock price in tandem. So that could be suggesting is traders really don't believe in the rally here, or they expect more volatility going forward. We've seen that significant move, not only by the media attention that Cramer brought on, but it had a great quarter. It lost less than was expected. It raised its revenue projections, and they're also really positive on margins as well. So what we'll look at over the next couple days is to see if traders take some off the table or if this continues to move. So what the implied volatility is suggesting is not the direction of the movement, but the implied movement of the stock price.
One thing that is also climbing is the short interest. And when you look at the shorts coming in, it looks like they don't believe this rally either, that they're expecting it's going to lose some steam because that has been climbing dramatically.
Right. What concerns me is with short interest, and we've seen this pattern over the course of 2013 because of the significant uptrend in the market. Even though there's a high short interest, that squeeze coming in is a concern of mine as well, which is why I really want to focus on the options market more than the shorts, because that's a forward-looking product.
Right. Well, you do bring up a good point because you may be on the right side of that short and win, but you could be on the wrong side. And if you are, and there's a short squeeze, everybody has to go out and buy stock to cover that short.
Right.
It pushes it even higher.
Right, and that's exactly what the bears have seen for all of 2013, even more so since the middle of November 2012. If you've been a bear, your P&L is just really not happy right now. There's so many factors, particularly going into the end of 2013, that's going to keep this momentum on the uptrend.
All right, well, one stock that has not had a whole lot of momentum is Twitter. It has been down since its IPO, and those Twitter options are going to be going on sale this Friday. So Jill, now that we've seen what the stock has been doing, what can we expect from the options when they go on sale?
Well, when the options go on November 15th, we're not really going to be looking at speculative activity at that point. We'll be focusing more on hedging activity, because when options first list on a stock, the ranges will be really, the increments will be really high, so anywhere from like $2.50 to $5. So what we'll be looking for there is to see how traders are hedging their existing positions. We'll get more of a look on the speculative activity 2 to 3 months out, which is typical of any new options trading. And we'll also be looking to see if weeklies list on Twitter options as well. In terms of the stock, I think it's going to be a little bit more orderly than what we saw with Facebook, not only just on the way the IPO was handled, but I think expectations in terms of social media stocks are more in line. Would I recommend a long-term holder to get involved right now? Probably not. Long-term investors that got involved at the IPO, the first day that it started trading, they're not looking to flip. From a fundamental and classical technical basis, we haven't seen any patterns emerge yet. We don't know what's going to happen over the next 2 to 3 quarters in terms of what we're looking at when Twitter starts reporting. We've seen some discernible 30-minute technical patterns on the chart, but I would wait a little bit to let the noise play out, see how options trade, and then find a more solid entry point.
All right, so there you go. There is your investment advice on Twitter options when they start going on sale on Friday. That was Jill Malandrino, and I'm Deborah Borchardt with TheStreet.